We're here in Austin, Texas, Conscious Capitalism, with the CEO of Hyatt Hotels, Mark Hoplamazian. Mark, thanks so much for spending some time with us.
My pleasure. Thanks for having me.
I was just sharing off camera that I had not previously looked at Hyatt Hotels as an investment. It just hadn't crossed my path, and I've been researching it here over the last couple days. And the first thing I'll say is one of the things I do as an investor, which we were also just talking about, is I go and look at what's going on in the culture. I like to know the rules in my portfolio are that I am not allowed to sell any stock that I buy or recommend in the portfolio for 5 years. Oh. So I'm locked in. And if we have a loser, of course our members can sell. Right. But I've got to own it, and it's my own personal money. It's the only stocks I own, period, in my life. And I'm just going to have to sit there and learn that lesson over time. So one of the things I look for is a great culture. I want to know that the people love going to work there. That's what's going to drive value 60 months and out rather than 60 weeks or 60 days, which isn't really a good indicator. So Hyatt Hotels has a great Glassdoor rating, and they have a beloved CEO. So share with us a little bit about the culture at Hyatt. Why is it showing up with such high marks from the people that have worked there and work there now in the anonymous set that is Glassdoor?
Well, maybe the best way or easiest way for me to explain that is I made a decision to join Hyatt in 2006. It was an active choice. And the reason I chose to join the company is because of the familial environment. There's a great deal of personal connectivity between and amongst the colleagues in the company, and so it was really a vote in relation to the people, and there's a deep and significant sort of emotional connection that we've got that does define the culture. So I would describe it as really a family, and part of that has to do with the fact that we've got long tenured people. So the average tenure of our general managers, for example, is over 22 years with the company, and turnover at that level is actually very low. So we've got a continuity, which is in our industry extremely important. Mm-hmm. Our business is really measured over many, many years. Our contracts with third parties to manage hotels is in decades. Mm-hmm. If we own hotels, those hotels once built are operating for decades. So everything about our industry and our business is really long term. So you also have to think about a culture over a long period of time and what it means to nurture that, but also evolve it as things change.
How do you think about performance and evaluate performance inside of Hyatt? I mean, not everyone works out when they come to work for a particular company. Yeah. What is the evaluation process, and what happens when somebody's identified as an excellent performer, somebody who's demonstrating the values, serving the world in the way that Hyatt is trying to?
So we've got a number of different metrics that we use, but at the field level, so in the hotels themselves, we've got an incentive compensation program that is focused on the guests. So how are we doing with the guests? And we use NPS as our fundamental measurement tool there. We have historically looked at levels of engagement amongst our employees. That's evolving at this point. We're trying to find better and better ways to actually gauge on a real-time, continuous basis how things are going with our associates. And then financial performance, of course, and discretion around values, living our values and really exercising them so that we can continue to support the communities in which we're operating.
Would you say in your business life prior to Hyatt that you have encountered organizations and a world where this statistic seems true to you, and that is the Gallup statistic that 71% of everyone that goes to work in the U.S. is either indifferent to that organization's purpose and their work, or they're actually downright negative? The way to describe it is you're in a boat rowing toward the fulfillment of your potential, and there are 7 of the 10 people just sort of sitting there. Well, actually 5 of them are just sitting there. 3 of them are rowing really hard, and 2 of them are trying to whack the people rowing and knock them out of the boat. Right. Does that end up seeming true to you? I mean, it surprises me maybe to that extent, but I know a lot of people are unhappy with their boss or unhappy with the environment or asked to do things that they don't believe in, and you guys have been able to make that not the case at Hyatt. So do you see that as being true, and is there anything that you haven't said so far that you think stands out about Hyatt's ability to get people engaged and fired up?
Well, I think look, the fact is that there are a lot of companies in the world today that are primarily motivated through a profit motive. And when that happens, you make a whole series of decisions associated with that. I'm talking about short-term profit motive. because if you were focused on a long-term profit motive, you'd recognize that you really needed to actually build connectivity with your employees and a culture that really resonated with them, and was also powerful to help propel them and allow them to grow. But it's really a short-termism and short-term profit motive that I think drives a lot of companies still. And I think that doesn't leave much room for embracing people and bringing them along, and also standing for something that's beyond the coming quarter or the coming year that people can believe in and really apply themselves to. So yeah, I think I'm not that surprised that there are a lot of either neutral or disengaged people in a lot of companies. Hopefully more and more companies are recognizing that that's not sustainable, and the new millennials, the new generation, won't tolerate actually going to work for companies that look like that. I think they really feel the need to be a part of something much bigger than themselves. So it's really critical to get the culture and what you stand for and what your purpose is really clear, and make sure that people know it and also can select based on their alignment with that.
It's a punishment to spend more than half of your waking hours at work that you don't enjoy.
I remember seeing an interview. One of the fellows who was involved in the founding of Home Depot gave an interview, and he said his definition of hell was showing up to work every day in a place that you didn't want to be or that you weren't fulfilled in. That would be hell for him. Of course, he was thrilled with his life because he was able to show up every day and do something he really loved. So that stuck in my mind, and I thought, yeah, that's probably right.
I want to talk about the hotel business in a second for people who've not encountered it and how to evaluate and think about it. But one more question just about short-termism. We hear, we're a Motley Fool's private company that sits and studies public companies and have for the last 20 years, that there's a tremendous amount of pressure to perform, not miss that number each quarter. There are guys like Bill George who ran Medtronic and basically brought all the analysts together right when he took over as CEO and said, I'm on a 10-year journey. If you're not on that journey with me, I have to answer your questions, and I will, essentially by law, but I'm not going to really be thinking through what you're telling me or what you think about our business unless you're trying to help optimize us for the 10-year period. So how do you resist or counter or integrate the short-term pressures that exist into the long-term vision and the goals that you're shooting for?
So it's a constant effort to and challenge to really make sure that we're communicating what we're doing and what current results look like fit into the longer term picture. We are building a business. We have historically run the business for the long term, and we continue to build the business for the long term. And so we are also an owner of a lot of hotel properties. Inherent in that means we have more operating leverage than a hotel company that may just manage hotels. And so we will have ups and downs. And as Warren Buffett said at one point, if the results are lumpy when I get them, they'll be lumpy when you see them, because I'm not going to spend my time trying to manage earnings profile. And I believe in that. I think that's actually not a good use of management team's time. So when we came public, we actually elected not to provide guidance, which was not well received initially and remains something that is a bit controversial. But our view is that what we have a responsibility to do, and we're trying to do more and more of it. In fact, we've moved significantly in terms of disclosure and transparency and analysis of our current results, which I feel very good about doing. I have no problem with it. I don't resent it and so forth. But we still don't provide guidance. And I think part of that has to do with the fact that I really don't want the mentality and the mandate internally to be, we got to contort ourselves to make a number. We have some volatility in our results as a result of our business model. But really the way to analyze and assess our progress is over a longer period of time, because as I mentioned before, our business is a longer term enterprise, and you can't really assess performance unless you're looking at it over a 5 or 10 year period.
We are opponents of guidance, pretty much at the Motley Fool.
I did not know that.
We're the ones that are out there going, that's great, and we don't want you to contort yourself. We want you to do what's best for the long term. And actually, it does present us opportunities with a business like the one you're describing. Now we'll talk a little bit more about the hotel business, but where you have some lumpiness, and the market will react to that. That gives us buy-in prices for the organizations we love. So it's likely that there will be a higher level of volatility in a company like Hyatt's stock equity performance over time than the standard company, and we view that as a great thing.
Yeah, and I think that, I mean, you see this in general. The market is highly sensitive to uncertainty and highly sensitive to volatility. So those things actually, I think, are very pronounced in today's world. Part of it has to do with the fact that there is structural volatility that we see, the U.S. government shutting down and
financial crises,
and you've got conflicts in Syria, and you've got oil price shock potential, you've got Iranian issues. So there are geopolitical, there are some trade and global economic issues. There is the BRIC phenomenon this year, where the BRICS are now being viewed as sort of a problem instead of a source of compelling growth. So I understand why the investment community is so hypersensitive, but that sensitivity does leave very little room or tolerance for uncertainty or volatility.
Let's talk about the hotel business now in a very generic way before we dive down into Hyatt.
Okay.
What makes for a successful hotel chain? What are the 2 or 3 of the core factors that aggregate around sustained greatness?
So first and foremost, people. If in our case, people are at the center of everything that we're doing. So if we don't have great people, then you can't have a great hotel company. Our business is actually very unusual because, if you look at consumer-facing businesses, a lot of times there are products. They're product-driven. So you've got a product that you develop, you put it on the shelf, and then it's available for purchase. In our case, our brands are delivered by people. So the people equation is actually first and foremost. The second is our brands. So you have to have compelling brands that mean something and actually do demonstrate that we can both attract a guest base and a customer base that we've targeted, but also fulfill in keeping them, retaining them over time, and run an efficient operation so that we can generate profits for our third-party owners or for ourselves. We own quite a few of our own hotels. And then real estate, in our case, real estate ownership, so we own hotels, and that's a key factor in how we can expand. In our case, most of our expansion in terms of our pipeline for future hotels is with third-party owners who are building hotels for us, but in some cases we are either buying or building hotels ourselves. So those are really the key components.
So how many Hyatt locations are there around the world, and how many are owned by Hyatt, and how many are third-party?
So we have over 500 hotels open and operating currently, and we've got a bit over 110 hotels that we own, and then another 30 or so in which we have joint venture interests. And then really the remainder are owned by remaining hotels are owned by third parties, and they're either managed or franchised. In our case, most of our hotels are managed. So
what's the difference between managed and franchised for someone who's never encountered?
For hotels where you've got that are franchised, you have a third party company actually employing the people who are running the hotel, and so it's a third party management business that's actually operating the hotel itself, and that owner of that hotel is paying us a license fee to use the name and also plug into all of our systems, central reservation systems and revenue management and marketing and sales and those kinds of resources that we make available to those properties. Managed hotels are hotels in which we actually are employing the people or directing the team to, and we're doing that directly. So it's our direct line of sight to the general manager and his or her team to operate the hotel.
So just broadly, what causes you to go franchised here, managed here, owned here? What would be 1 or 2 factors for each that would, like, this location or this size, this demographic, this economic model? What causes you to go from one to the other?
So we've got 7 core brands. We just launched 2 new brands in the all-inclusive market, but we haven't opened one hotel yet under one of those brands. So right now 7 lodging brands. And what you find is that the brands that are at the end of the lower rate, more select service, more simplified service model end of the spectrum are the hotels where there's a higher incidence of franchising. And the reason for that is because it's a relatively simpler service model to be able to deliver to guests, and therefore a bit easier to actually adapt third-party management to.
There's maybe an analogy, maybe not, to software development, which is we're going to outsource the simple things, the simpler things, and have the tougher design issues handled internally.
Yeah, something along those lines. And I would say, so that's one factor. The second factor is that in some markets, you have a very high incidence of franchising because you've got, over time, very good franchise management companies that have grown up. Now, our job is to really make sure that we're doing business with the best franchise management companies so that our brands can be well represented to our guests. But in markets like India, for example, where franchising is just now starting, or in China where it really doesn't exist yet, you have no franchising. And in our case, we probably won't see any franchising for, I don't know, the foreseeable future. So that's the issue on the franchise versus management front. On the ownership side, our perspective is that the best way for us to continue to grow is if we can actually work with third-party owners to manage properties, because it's the lowest capital intensivity. The key from our perspective is that we are of a size and of a coverage in terms of markets where sometimes actually utilizing capital is the only productive way to really secure a great location and to be able to gain representation in a given market. And there we will go and use our capital base to go and secure a property. So we're using it in a very deliberate, strategic way to get entry into markets in which we don't have a presence or where we have a limited presence. But we're also actively recycling our asset base. That is, we're selling some hotels and using the proceeds to buy other hotels.
Buy some of your managed units and make them owned?
Primarily looking to buy hotels that we don't currently have as part of our chain, but we would like to make a part of the chain.
What's an example of an acquisition that you've made?
Well, we just bought a large convention hotel in Orlando called the Peabody Hotel, now called the Hyatt Regency Orlando. It's a very large hotel, 1,640 rooms, 1,641 to be exact. A lot of meeting
Senior
space.
executive suite.
The presidential suite.
Exactly.
And a lot of meeting space internal to the hotel, but it's also connected to the Orange County Convention Center, which is more than 2 million square feet of space. So it's sort of a hub of convention activity at that location. Orlando is the second largest convention market in the U.S. And while we have hotels there, we don't have a convention hotel, a proper convention hotel in that market. So it was a really important place for us to go and secure representation. So that's a recent acquisition. Last year we bought, earlier this year we bought the Driscoll Hotel here in Austin. Last year we bought what used to be the Nico Hotel, which is now the Hyatt Regency Mexico City. Mexico City was a top 5 from a population base and geographic, from a global perspective, a geographically really important market for us to be in. We had no presence at all, not one hotel.
Are you typically buying a single hotel in an acquisition, or do you ever buy a group of 7 locations?
So we bought in 2011, I think it was, or 10. I'm losing track now. I think it was 11. We bought a portfolio of 20 hotels under the brand names Hotel Sierra and Avia Hotels, and we converted them into Hyatt brands. So yes, we'll do portfolio deals. We also bought another group of 3 hotels in that same time frame, converted those to Hyatt houses. So we've done both. We've done both portfolios and individual properties.
What's an example of a couple factors in your playbook on acquisitions?
Well, it's really reduced to really 4 areas that we're focused on. One is gateway cities where we don't have representation. The second is resorts. So I mentioned earlier that we made an investment in an all-inclusive company, and that's really designed to really expand our resort presence. Third is conventions. So convention hotels, and that's the Orlando is an example of that. And the fourth is building out the urban representation for Hyatt House and Hyatt Place, which are our 2 select service brands. We've really gained a lot of traction. We launched these brands back in 2007, and they've gone like wildfire in terms of performance because we've been able to really gain great market share in the markets in which we have those hotels. but we have very, very little urban presence. So until this year, we had almost no urban presence to speak of. And this year, we've opened Chicago, Manhattan, Austin, and we will be opening Nashville, additional New York, additional Chicago, San Diego. So we're starting to build out our urban presence for those hotels. Those hotels, again, are more limited service and at a lower price point, which our corporate customers love because they have a wide range of people traveling to those markets, and they need different price points to select from. Mm-hmm. So we're thrilled with the early performance that we've seen from those urban locations. Mm-hmm. And so I think that this will be a great growth vehicle for us as we move forward. So we'll continue to commit capital to those properties, but those properties are in such high demand by third-party owners that oftentimes we're developing hotels or building them or even just committing to build them and then selling the project off or recycling the capital quickly.
Got it.
So that's probably an area that we will continue to invest in, but then recycle out of.
What does the Hyatt brand, the parent Hyatt brand, mean to people who are going and staying at a Hyatt hotel? What are some of the distinguishing, unique qualities?
Well, first and foremost, it's got to be a sense of care that we bring to bear, that people feel both cared for and also a sense of connectivity to our team. Mm-hmm. So that is at the core of.
We're here at a Hyatt right now, and I can't tell you the number of times I've been greeted. In fact, the only time that I felt this way in a hotel environment that I remember recently was being out at Wynn Resorts. We had a leadership development group that went out, and we had an hour and a half meeting with Steve Wynn, which was incredible. But everywhere you went around Wynn, there was just a very warm greeting from everyone, and willingness to jump in and help you at anything. So that's number one at Hyatt.
So that's really the core. That's the core essence of what it means to be in a Hyatt property, and our values span all of our brands, but they do represent how we bring ourselves to what we do, and a lot of that has to do with mutual respect and about compassion and about caring. So that's really at the core. And we've enjoyed a bit of a halo relative to the other major brands with respect to quality and maybe differentiation, because the old adage within Hyatt was the difference in Hyatt is the difference in Hyatt, meaning we didn't do a cookie cutter approach to many of our hotels. So we don't have a lot of cookie cutter properties. And so that uniqueness is actually something that we tend to celebrate. Back in its inception, for when Hyatt really got into the bigger hotel market, out of motels into hotels, the atrium lobby was a defining characteristic for Hyatt property. So Hyatt for the late 60s and 70s was known as the Atrium Hotel Company, starting with the Hyatt Regency Atlanta, which was the first big hotel that the company had, 1968, which has a huge internal lobby, atrium. So it became known as the Atrium Hotel Company. And as you carry that forward, there is a lineage of special architecture in some of our hotels. If you look at our presence in some of the key gateway cities in China, for example, we have big prominent atriums in a lot of those properties. So it still carries on. We don't define ourselves around our product, but it is important to have a great product. So I think that the other dimension is that you can usually rely on having a special product there that's hopefully reflective of the local market that you're in.
Here's my question, just being a punk. What happens with video conferencing? I'm just going to sit in my boardroom and have my director meeting with everyone on a HD monitor around a table. Business travel as we know it is simply going to end, Mark, and what's going to happen? Well, to good old Hyatt.
The fact is that video conferencing has been around for a while, and we're still here. Two things I would say. First, the other question you could ask is, with the new generation and digital connectivity, do people really care about human interaction, or are they just happy to live their lives in a digital delivery? And the fact is, with a higher incidence of digital existence comes a great desire to have authentic human connection, including millennials. They want to have a different form of it. They want to have more interaction. more back and forth interaction. So it's not just being served, but people crave authentic human connection. So I would say that just from a transient guest perspective, that's one thing. The second thing I would say is it's very hard to substitute in-person meetings. And so whether it's sales initiative or relationship building, it's really difficult to do that via video conference. So we see that convening and meetings, that segment of the market is still alive and well. And my suspicion is that video conferencing will grow, but I don't personally see it as a competitive threat at this point, as a existential matter. I don't think it's a fundamental threat to the industry.
What is a disruptive force in hotels right now? What do you think over the next 10 years from now, or 5 to 10 years from now, what could be substantially different in the experience that somebody has when they stay at Hyatt?
Well, one thing that's evolving is how you book your hotel rooms. So we've seen from the 2000 to 2002 timeframe proliferation of the first online travel sites. And from that time to this time, there's been a further proliferation and a lot of expansion of a lot of different businesses. It's really not been growing as a proportion of our total channels of distribution, but what I see is that new and different offerings are being brought to the fore, and they include integration with other travel, they include integration with other services. And so we'll see what that turns into. So I think one thing is how you actually interact on the front end booking. There's some companies that have grown enormously. Priceline is now a huge enterprise.
Incredible,
it's really grown in market cap, really in a huge, stunning way. But you also have Expedia, and you've got the other online travel agencies. And so you'll start to see, I think, evolving competition there. I think there'll be more intense competition. I think that's good for the consumer. And so that's one thing that will change. The second thing that will change is that the whole digital interface in the room needs to get revamped in its entirety. Because historically, people were captive prisoners, I would say, of whatever video content or whatever TV content was made available through some mass deal done with some company that was a content provider. In today's world, people are traveling with access, remote access, digital access to Wi-Fi access to Hulu accounts and Netflix accounts and their own video libraries, and their ability to utilize their own devices, and the need to integrate into a delivery vehicle in the room, maybe it's a flat screen TV, maybe it's a big monitor, is something that we will see a lot of evolution in, and we're working on those initiatives now. It will take some time to actually deploy and implement. And then I would say the seamlessness of the experience to get into your room when you show up is also evolving as we speak. We eliminated the front desk at our boutique brand, the Andaz brand, because people didn't really want to stand in line and check in at a desk. So we made it a much more fluid process and something that's...
Yeah, I was going to say, what are the pain points of staying?
That's one of the big pain points, which is I don't want to stand behind 14 other people waiting to get to the front desk to check into my hotel room. I want to be able to come in and get to my room seamlessly. So some of that's technology, which is, can we actually get a reliable system where you can use your iPhone or your other device to gain access to a room and never have to stop at the front desk to begin with. So that's the ultimate sort of frictionless entry point to the hotel room. We're experimenting with different technologies right now to be able to do that. But we have taken a lot of initiative to reduce the amount of time you need to spend at the front desk for that purpose. People do want to have access to services and people to talk to, but not necessarily stand in line to fill out forms to get to their room.
Last couple questions. The international to domestic breakdown and where it is now and where you see it going.
So we've got about, of the 500 plus properties, we've got about 125 outside the US and growing enormously. So if you look at the 200 properties that are in our pipeline, the majority of them are outside the US. So we continue to open more hotels in China and India. Those are our two biggest markets from a growth perspective. So there's no question that that there's going to be a shift more towards international representation for Hyatt over the next 5 years than we have had in the last 5 years. The US is still our biggest market by a lot, and we have all of our brands represented in the U.S. So that will continue to be an important piece of the puzzle for us, but the shift will be towards international.
Do you lose any sleep over leverage?
You mean,
just having
financial leverage?
Yeah, just having financial leverage in your business, and the volatility of your stock not going to worry you.
No, from a financial perspective, financial structure, capital structure perspective, we really focused on making sure that we remain investment grade. It's not, and just to be clear, we're remaining investment grade not necessarily because it's cheaper to do so. It's marginally cheaper to do so, not wildly cheaper to do so, but because we think that it reflects, an investment grade rating reflects a capital structure that will allow us to endure cycles. And we live in a cyclical business. It's one of those old adages, when you're in a cyclical business and you're thinking about leverage, the first rule is don't forget that you're in a cyclical business, and the second rule is never ever forget the first rule. So, because you see companies that get into trouble by over-levering.
They look great. They look great for a while.
Right, because it really pushes up your returns on capital and lowers your weighted average cost of capital for a time. So for us, we want to be able to have flexibility through the cycle, and we want to be able to be in a safe position at any point through a cycle. So our metric for that, roughly speaking, is just remaining investment grade. Doesn't mean that we won't flex the balance sheet from time to time. If we saw something truly compelling that we wanted to do, we could imagine doing it. But our long-term goal would be to stay within investment grade.
Last question, what drives you? What is exciting, motivating, inspiring to you to take on the task of running such a substantial business and a public business? What is it that is most exciting to you about your work?
Well, I guess the thing that's most fulfilling is to see how we can impact people's lives. And I think I would start first and foremost with our own colleagues. When you've got people that you can really bring along and provide opportunities to and really enrich their lives, there's nothing more fulfilling than that. If we can extend that to include our guests and extend that to include our hotel owners and extend that to include our communities, then that's a huge win from my perspective. We will have made a big difference in the world. So that's really the thing that keeps me going and gets me up in the morning.
Well, and actually my last question, which I always do in every interview, how has the Conscious Capitalism event been for you? Is this your first Conscious Capitalism experience, and what have you taken from it?
This is my first Conscious Capitalism experience. It's been great, and actually much more enriching and much more substantive than I imagined it would be. I thought there was going to be a lot of sort of networking time and input from different CEOs, but the content people that they brought into the conference to really talk about how you can actually enhance and develop yourself as a leader was really, it's all very interesting and very stimulating information, and I think very important. So I got exposed to this primarily through some interaction I had with Walter Robb at Whole Foods not so long ago, and that really turned into a motivation from my side to really learn much more about it, because I think there's a clear mandate that they set for themselves, which was going to market and being and representing these values, that is having a bigger impact on the world, is good business and translates into good growth, great loyal customer base, and actually great financial performance as well. Those things result from that approach, and I think we are in a very similar position to continue to focus on our purpose, which is really around care, and have that translate into value over time.
You know, it's the we were talking about it before, the Fred Reichheld Loyalty Effect. It's a wonderful book. It really influenced my investment approach. I thought of myself as a long-term investor, but the more that I've read books like that and books like The Outsiders and spend time here at Conscious Capitalism, the more evident it is to me in the Everlasting Portfolio, which I was mentioning to you before, where I'm mandated I may not sell within 5 years. You know, frankly, I kind of wish it was within 10 years, but I don't want to do that to members and put them on the hook to think that they have to be there for 120 months. But there's no doubt in my mind that the best investments we're going to make are the ones that we hold for 10, 15, 20 years. Certainly not for 1 quarter or 1 year ever in our portfolio. And I think Hyatt is a great consideration for us that I knew so little about 48 hours ago. And Mark, thanks so much for sitting down, sharing your perspective, and best of luck.
Thank you, appreciate it.
Right on.
Thanks.